Those desirous of meeting me in Bahrain should come on the 24th of May, the Friday. We decided to do an event there because we had covered all Gulf countries and missed out only on Bahrain. Even during my long stay in Dammam, I had never made it across the causeway to Bahrain. So we decided that we'll visit Bahrain. I hope to see you in Bahrain on the 24th of May, the Friday. If you'd like to meet me, kindly message us to the WhatsApp number given below or drop a mail to the email ID given below. Once again, I thank you for your support.
Hi everyone, welcome back to Be Rich. Today I want to talk about a comment which Arun had showed me, which I thought would be rather something interesting to do a full video on instead of just talking about it briefly during a podcast. This was a comment from Amrish Venugopal, who had written saying, "Gold has reached an all time high, and silver is yet to reach it. I am planning to invest in Silverbees. Historically, I've seen silver also tends to increase during rate cuts. Is it a good time to buy silver now? Please share your thoughts." Well, I do have thoughts. Yes, gold and silver do move sometimes in tandem, and sometimes they don't move in tandem and they can diverge. And I did talk about this, and I'll ask Rupesh to put a gold and silver chart on the screen, which I had used on that video. I'm sure Rupesh would have put that video, and you can see gold hits record as Middle East tensions lift demand. And we spoke about that in that video. That basically, let me recap that video, that the reason why the price of gold is rising the way it's rising is just not on inflation demands. It's also because of what's happening on geopolitically across the globe, and central banks are looking at hoarding gold, and that demand from central bank has been pushing gold prices steadily northward, and that's the reason why we're seeing such a huge spike in gold, also coupled by inflation. And the fact now we're sitting where we're sitting is why gold is where it is. But in the chart, you can see silver spot price is in red, gold price is in black. And historically, there's a huge gap between silver and gold way back in 2000. Then, as the years progress, silver starts correcting. And in 2022, silver actually moves below gold. And then it picks up again. And now gold and silver both are in tandem, have gone up remarkably high. So, does this deserve what Venugopal was talking about? Should you be looking at this? Well, there is a simple ratio which people use since you're talking about gold and silver. First of all, my recommendation is staying in gold. I don't venture into silver, but there are people who trade in silver and in gold. And there's a simple tool people use, and this is known as the gold silver ratio. And I thought I'll talk about this, and it might help Venugopal. It can help other people, other investors who are out there who are looking at making a silver play with gold also. So, how do you understand this ratio? This ratio indicates how many ounces of silver it takes to purchase an ounce of gold. So, you're measuring silver in the price of gold. So, amount of grams of silver it takes to buy that gram of gold. For instance, if the ratio is 80 to 1, that means it takes 80 ounces of silver to buy 1 ounce of gold, meaning around, let's say, 80 grams of silver equals 1 gram of gold. So that is the ratio. So now let's take this as an illustration. This is purely illustration. This is not actual numbers. So don't assume these are numbers. And the caveat being, I'm not recommending that you use this ratio. This is purely on an intellectual, I'm sharing information as of interest it might be to you. I do expect you to do your own research in this. I do expect you to talk to your financial advisor and see if whatever I'm saying does make sense. This ratio doesn't mean a short success. It's not a shortcut, as you people like to think. All that caveat being said, now let me give you an example to illustrate how this ratio is used. Suppose the price of gold is $160 per ounce, and the price of silver is $20 per ounce. To find this ratio of silver to gold, you divide the price of gold by the price of silver. So the ratio is equal to price of gold divided by the price of silver. So that is $1,600 divided by $20. That ratio gives you 80. So this tells us the ratio is 80, then gold is 80 times more expensive than silver. Now that you have seen this number, what is it that you're supposed to do? Well, this is a strategy. Like how we have PE as a strategy, price to books as a strategy, we have the silver to gold ratio as a strategy, investing strategy. Investors use this ratio to determine what is the best time to buy or sell these metals against one another. This is strategy is based on historical highs and historical lows of this ratio. So, like how PE, we look back and say the median is 50, and now the people are saying the median in India should actually be moved up to 20. This debate is still ongoing. Same way, silver and gold prices look back historically, and based on how the ratio has moved historically, this is what the general rule is. This is the thumb rule for the ratio. When the ratio is high, saying 80 or higher, silver is relatively cheaper compared to gold. This may be a good time to buy silver as it's undervalued or gold is overvalued in comparison only to these two metals. Please realize I'm not talking in dollars, I'm not talking in rupees, I'm not talking about oil, I'm not talking about interest rates, nothing. This plays between the price disparity between gold and silver. The market sometimes doesn't move in exact tandem and it maintains a gap. So you're taking this arbitrage between silver price and gold price as it's not caught up with one another. So that arbitrage is what you're playing with. Please keep this in mind. It's got nothing to do with historical highs and lows of silver or gold or whatever geopolitical situation is happening. This is purely on between the price disparity between these two. So when the ratio is 80 and higher, silver is considered to be cheaper than gold, and it is a good time to buy silver, or it also could mean gold has become overvalued. Keep that in mind. When the ratio, say, is 50 or lower, gold is maybe cheaper relative to silver, and silver might be considered expensive. So this could be a good time to buy gold and sell silver. So how do investors use this ratio? Well, an investor might decide to trade based on the changes in the ratio. So, for example, if the ratio rises from 60 to 80, an investor might sell some gold and buy silver, anticipating silver is undervalued and will either increase in price or gold will decrease eventually, bringing the ratio back to a more typical value. The gap will come back to normal. Conversely, if the ratio drops from 80 to 60, the investor might feel that sell some silver and buy gold, predicting that silver has become overpriced and gold is now undervalued. So this is strategy. While straightforward, requires understanding of market trends and economic factors influencing prices of these metals. It's also important for investors to consider the long-term investing goals and risk tolerance which you have before making these kinds of trades based on this ratio. Again, I want to stress that this video was purely on an intellectual level. It was an educational video. I'm not asking you to go immediately calculate these ratios and start buying and selling. So please do research, do understand what I'm saying, see what I'm saying, does it hold value? And from those understandings and those value points, talk to your financial advisor, your SEBI registered advisor. Then you can look at gold bees and silver bees and see if you can be bouncing between gold and silver and creating wealth in the price disparity and the arbitrage is there. Like how people do between bond and stocks. This is another methodology people use to create wealth. Thanks for watching the video as always, guys. If you did find this video informative and entertaining, do think about sharing this video and liking it, and do put your comments down below. I will read it and I'll try to respond to them like I just did with this video. I've been asked by my team to consider covering some general market news in India and some general market news across the globe before diving into a topic like this. If you think this would be of value to you, please put it down in the comments below and I will try and bring that into the video going forward. Thanks for watching the video again, and bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.